Alright, so hi guys, Charles here.
Hi, TT here.
Here with Chatter.
Matters.
Alright, so on this episode today, we're going to talk about interest rates. It's the thing on everyone's mind. It's on my mind. I think it's also on your mind.
It's definitely
also.
on my mind.
I think it's on everyone's mind. If you own a house,
Painful.
it's really painful now. I'm not sure about how you guys are handling it over on the other side, but I think it's very important that we address it. What's going to happen for 2024 onwards? Because 2023, we can see that it really rise significantly. Maybe you want to share more about what really happened.
We've been through a lot of rate cuts. I mean, rate gains. What do you actually call it? Rate hikes. Yeah, that's the key word. But anyway, what we need to know is that interest rate has been rising very, very fiercely since I think last year. And over don't know how many rounds, probably more than 10 rounds. And then on the US side, the basis point, I think it's been like 500 plus basis point, 5+%. On our side, it doesn't hurt as much. For the SORA side now, it's still sitting on around 3.7+%. Most of us are holding on to the 3-month SORA one. For those a little bit more on the 1-month SORA, then it's more of a wild ride. But for most of us, they are on the 3-month SORA. Yeah, sitting about 3 something, but 3.7 something. But if we factor in the spread, that means that time my previous package was about a spread of 0.7. That means we are looking at 4.4%, which is quite painful. What about you? What's your spread previously?
Yeah, so I mean, generally the fixed rates currently now, I noticed that most people in buying the resale property, most of my clients also, their fixed rate now, they're getting about 3%. Some are lucky to get like 2.9,
Correct.
about 3.1, around there. That's the fixed rate. In terms of floating, currently I write about 4.4, 4.2, 4.3, including a bank spread. Because I think not only the floating rates at 3.7 now, including that also we need to factor in, bank also need to make money.
Oh, definitely.
Yeah, correct. So that, and it's really very high. It's like all-time high, I'll say, in my opinion, or probably in my age, wherever I took a loan. So it's something in our generation, it's something that we'll only experience not many times, I hope, in the
And
time.
the thing is, I think the previous time that rates has gone up to such a insane level was like, I think more than almost about 15 years ago, back in 2007, 2008 era. That's why I think at this point where at our age we are looking at our first few properties, this is where we are being smacked in the face with such a high interest rate. Definitely is gonna scare most people, right?
Yeah, correct. So, I mean, generally for those people that I guess is new in the property space, why interest rate matters in real estate especially is because most of the time when you buy a property is taking 75% bank loan. And with that, taking a bank loan is always important to understand interest rates, because when you lock in a rate for a certain time, that will affect your monthly payment, interest expense as well, and a lot of payments along the way regarding your finances as well. So that is a very important consideration, and it has a very important strength in terms of real estate market as well, how it affects the real estate market, right? Maybe TT, you want to share more about that?
Okay, first of all, we need to know that, and also acknowledge that whatever we pay towards the bank, part of it goes towards paying down our loan. And that is how we slowly clear our loans over the whole length of the loan tenure. But what I feel we need to be more aware of is the amount of interest component that we are paying down. Because that interest component is never ever coming back to us, even though when we
it's
sell
gone down the drain.
That's basically a sunken cost.
Yeah, correct.
So if we are looking at a $2 million property at current interest rate, assuming like what I mentioned just now is about 4.4%, then with a loan tenure of 30 years, 75% loan, you are loaning about 1.5 million. Every single month you have to pay down basically chalk up $7.5 thousand dollars. $7,500, and out of that $7,500, $5,500 is interest rate. That means every single month you are losing $5,500. But on the other hand, where interest rates are a little bit lower, if you manage to lock in at the past few, I would say 1-2 months around that rate of 3%, you would have been paying, instead of $5,500, you would have been paying $3,750 on average around there every single month. And for those that are lucky, then they managed to lock in at a 1.5. Remember there was that time 1.5%.
That's crazy.
Quite some banks that we shall not mention. 5 years for 1.5. I remember there some of my friends recently, they just told me, oh, we lock in at the 5 years 1.5. I'm like, oh wow, you managed to get the best deal, man. And even if those guys, they okay, for example, those guys that managed to lock in at the 1.5, then their cost is just a mere $1,875 to hold on to that property. That's why you see the difference, $5,500 to $1,875.
It's a huge difference. And I mean, yes, of course, the down payment goes up progressively as well, not estimated, but what Titi mentioned, the interest component, right? The money, because this is kind of invisible cost. Every month you pay your mortgage, you don't really see this, but it's slowly eating away. That means you realize that actually your principal or the balance of your loan is not really drawing down as fast, right? And then that is really going to eat into it, and you're going to actually be paying more into, like what you say, sunken costs, money you can never see back, and this is the bank's profits at the end of the day. Yeah, but so I mean, it is a situation now. I think as maybe as a general user and a person also looking to buy a house or already bought a house and already paying a loan, I think it's important to really consider to make sure that you have all these finances. But that being said, is that if let's say today now, Titi, if I can buy at 1.5%, wow, that open up a lot of opportunities for me. I mean, right?
Oh, definitely. Especially if at that point 1.5%, the TDSR back then was just based on 3.5%. That means we are able to loan a lot more.
A lot more, correct.
And now we are assessed by at around 4.5. And some banks are even assessing clients at 5.0, and that would have eroded a lot of your purchasing power because of the amount of loan that the banks are willing to grant us. And that would have been, example, a couple would have been maybe easily able to afford, I would say, not say easily able to afford, they would have been qualified to go for a loan for up to maybe a $2.3 million property, but now they're only maybe looking at about $2 million property.
Yeah. So basically the firepower is like cut by a significant percentage as well.
All right.
Yeah, and I think that being said, the other way also persists because now we are in an environment where it's very high interest rate. Probably when you guys are getting a loan assessment, that's probably what you get. But if you imagine when the rates go down, probably the stress test also will go down. Then from there also, the purchasing power increase as well. Right?
Correct. And then what will happen to the market because of that? And because when people start to look at, hey, the interest rates are low, then the monthly installments are also low, and then it seems like I'm able to afford. And because I mean, for us, we tend to be more because being being in the market for quite a while, then we've been observing the market. We are able to tell mid to long term. But most people, when they buy property, they only, what are the rates that I can get today? And then, hey, today I can afford.
Yeah.
And this is what we have been observing for quite a lot of buyers. They only look at what we are having right now, and then they decide, this is actually quite affordable, and we should just go for it. And because of that, demand tend to go up, especially when interest rates are low, which we are also praying that it comes.
I think everyone's hoping it. But I think one thing to take note is that for those you guys that are really considering to shopping a property now, or like for myself, I always advise my clients to make sure that they know that the current interest rate, because at the end of the day, we're buying a property for a long term, right? It's not like a short term thing. The rates, yes, it will change. But currently now, I guess people might have bought during that time when there was a bit of low interest rate, and currently now they might be facing pressures of like high interest rate environments and stuff like that. Suddenly they see their mortgage like jumping kind of thing. So I mean, I think for myself recently, it's very important to understand there are options that we can do, right, for this one thing. Yeah. So I think I'll share with one is called repricing. So repricing is very important in terms of ways. It's just that basically, let's say now I'm with a certain bank that I take my bank loan with, and I'm just readjusting my rates because after my lock-in rates expire, and then they'll probably shift it back to a floating rate where currently now it's a very high amount, and then I'm going to re-lock into a fixed rate. So that's what you call repricing.
I think it's important to also know what your previous package would have been, whether they allow you to do free repricing, because not all repricing are free.
Correct.
We cannot say, hey, today we hear this Chatham Matter podcast, then we want to do repricing. But the banks will still allow you to do, but there may be a fee that is incurred. So make sure you check in with your mortgage banker to see what are the terms especially before you sign anything. All this has to be thought about very carefully beforehand. Go and talk to the relevant expert in the respective field. Can be your real estate agents, can be your bankers, all these, and then compare across the different perspective. Be very careful lah. So like what Charles mentioned just now, repricing is within the same bank because you're trying to get for better rates. But what's the other thing what's the other term if we call it trying to transfer our loan package to another bank?
Refinancing.
Okay, so we get it right. That one is called refinancing.
Yeah.
So why would I want to stick with the same bank?
So same thing as like flirting, I'll say, or getting into other areas, is where you're trying to court someone else's businesses. I'll attract you with better deals. Yeah, I think that's a very good analogy to sum up the thing.
True.
Yeah. So I'll say that's how you look at repricing and refinancing. Sorry, yeah. And I think to add on also the TT is that yes, it's very important to check your existing rates. For my side, I usually make sure that I run through the proper thing with my client to make sure that what the exacting rates, what's going on. So at least they know that, hey, this is not shocking to them when it comes on. And then what's going to happen next? How do we make sure that we are always minimizing costs as much as possible? Yeah.
And now we are on this topic, right? What about you? Do you feel you should be repricing to something that's a fixed rate right now, or do you think that the rates are going to come down fast enough so that you won't be you prefer not to get it fixed?
So I think that's like now if you're an influx decision, like what should I do, kind of thing. Right. So like for I think first of all, this is not financial advice at all. We need a disclaimer because this is
just our own point.
My own point and my own personal decision. So for myself now, I'm on a floating rate, and I have the option to consider a fixed rate or repricing or floating rate at this point in time. Personally, to me, looking at the market forces and the macro factors moving forward, I personally feel that I would go for a floating rate. I'm willing to. Yes, it's painful now. I agree with you 100%. The difference is significant. I am willing to stomach it for an opportunity for a better one. It's definitely a riskier approach. I definitely agree on that. But that's something that I think I'm trusting my research that I've done and the backing in it. And I stick by my word in terms of doing that.
So you feel that the rates are going to come along fast enough for you to not fix it?
Yes, that's my personal opinion. And that's I'll stick by it, and that's why I'm going to do that. Yeah.
For me, I'm a little bit more conservative. I feel they're still going to come down, but probably not so fast as Charles believe in. After all, I feel the Federal Reserve, they will still want to hold it long enough to keep the economy in check, but at the same time they cannot devastate the economy to the extent that they destroy everything. And well, I got weak hands right now. I don't have diamond hands right now, so I have just unfortunately just repriced because somehow the bank side is able to give me to grant me the new loan on quite a short notice. So it was kind of I was really like what he mentioned. I was really on that fine line between should I reprice to a fixed rate or should I still stick on and ride the storm out. But since it seems like I'm somewhere in the middle line, right? Then they managed to get it started fast, and then what kind of inched me towards the side of trying to go for a fix. But like we mentioned just now, all this just is our own point of view. There's no right or wrong. And we are not mortgage experts.
Correct, exactly.
This is just what we believe in, and we do have clients that both have fixed rates and also floating rates.
Correct. Right? Yeah. So I think it's more important, like what he mentioned, is to understand the whole entire situation, understand the cost involved for both pros and cons. And at the end of the day, the decision is yours from it. But definitely, I feel that it's important to consult all kinds of specialists that are in this field to get the proper necessary advice so that you know. Because it's very important, I'll say, because this kind of decision is like, it affects you for probably 2 to 3 years kind of decision.
Because nobody can tell the future.
Correct. No one. Like, we never know what's going to happen in the next few months. Yeah. And
also, I truly don't believe that we have somebody that even working in a bank or which financial system. No, I don't think there is somebody that is very, very sure that the rates are going to come down by when here and there.
Yeah.
It's only based on an educated guess, I would say.
Correct.
So that's why it's important to do your due diligence and make an informed decision ultimately whether you choose to go for a fix or you choose to go for floating. So Anyway, but if you think otherwise from our point of view, then feel free to comment in the space below and then let us know also, because ultimately it will be nice to share your point of view compared to what both of us are having right now.
Yeah, so do tell us, if you're team floating, a team
fixed,
not fixed, or the most baller one where you have no loan at all. But
no burden.
Yeah, so I mean, definitely, we will be love to hear comments. So I think this probably concludes what we have to share.
Definitely. If you find what we are sharing here today is helpful for you, then make sure you help us by liking, sharing, and subscribing to our channel, so that we can keep in touch and then look out for future episodes that we have for this Chat the Matters.
Yes. So, Titi, what's the next episode that we want to cover now?
Next episode we'll be looking probably more at property taxes. I think that is something that has been on quite a lot of people's mind, because these 2 years, I think this year we just had a raise. Next year we're gonna have another raise, and the raise can be quite a lot, especially for the higher quantum properties. For the HDB side, not really that much, really.
But there is still a significant tax increase in terms of the bracket.
Yeah. But of course, they did a tax rebate thing recently to help a one-time offset, but eventually it's still gonna come in.
So I think this one definitely will leave it for the next future episode. So still tuned if you are interested to find out more.
Yep. If you guys have any other specific topics that you want us to talk about or what, then just make sure you also comment on the below to request on the topic, and we see whether we can fit it into our channel.
Yeah, that'll be nice. All right, see you guys.
Bye.
Bye.